We are starting now. Good. I only have like an hour here and then I'll be out of this place. So as usual, I hope you can hear me. If you can hear me, just give me thumbs up. Robinson can hear me. Who else? CB Trace, Asimobute. Okay. All right. Give me a second. I'm admitting a few people. Can we give them 3 minutes? Just 3 minutes and then we start. One more minute and then we are starting. Just a minute. Just a minute. Just a minute and then we start. Just a minute and then we start. Perfect. So I hope you've been good. You are doing good. Because I don't have time today, I'll jump directly to the business of the day. And it's raining cats and dogs. But we'll get somewhere. Two. 1 2 1 2. Perfect. So I think we can start by from where we left last time. And we said that today we'll be looking at CRT and AMD, CRT and AMD. The main focus is to understand these things that I will not go back to. So I want to go directly to the class. So we looked at all of this. After this, I'm going to send you the PDF so that you can go through it at your own time. And where were we? So this is where we left yesterday. This is where we left. And the question is, what is the 159 rule and AMD in SMC? Or how do you incorporate this into SMC? It is very easy. AMD stands for accumulation, manipulation, and distribution. If you remember yesterday, we said that every time the market is doing three of these things, it is either accumulating, or manipulating, or distributing. The moment you understand this, it becomes easier for you to not only trade, but to trade profitably. So what is accumulation? Market stays sideways, building orders. It usually looks boring, and then like a lion hiding in the glass before an attack. So this is what happens. So when there is accumulation, we don't see a lot of movements in the market. When there is accumulation, you don't see a lot of movement in the market. And what you see mostly is that you see the market is like it's raging. It's a raging market. So the market is not like moving in either an uptrend or a downtrend. And what is manipulation? Manipulation is a fake move. So sometimes you hear people say that I did my analysis well, I did execute a trade, but the market took out my stop loss and then it continued with the move. So that is what we call manipulation, and I'm going to show you in real time what usually happens in the market. Then we have distribution. This is the real move, or this is the intended direction of the market. So after manipulation, the market will now continue or move into the direction it was intended to do, and I am going to show you this in the charts. So when you look at this, I have two charts here. Don't worry, I'm going to explain, and I need to give you a step-by-step analysis of what happens every day in the market. Not every day really, but what happens generally in the market, so that it will be easier for you to understand this chart and what is happening here. So how many of us downloaded TradingView? Let me see with a show of hand. TradingView. If you downloaded TradingView, I think it's one of the first things I requested us to do. So no, I need to see more hands so that I don't move around. Who has TradingView? Okay, I see a few of you. All right, okay, that's good. that means we can continue. If you are those of us that are following on TikTok and others on YouTube, you need to download TradingView for you to be able to follow this class. Meanwhile, I'm going to upload this class on YouTube, so you can go and backtest what we are saying here. So if you look at this, we have several things that are happening here. So I need to give you a step-by-step of what happens in the 159 flow. 159 flow. Now, so that I don't confuse you, 159, this is 1 a.m. New York time, 5 a.m. New York time, 9 a.m. New York time. Now, because I'm in East Africa, you allow me to use the East African time to demonstrate this, but you can convert this to any time zone depending on where you are. But this is 1 a.m. New York time, 5 a.m. and then 9 a.m. and I want to show you how 159 connects to our strategy and how this will be a lifesaver for you in trading. So first things first, let me show you how this one looks so that you'll be able to follow through. We have the Asian ridge, we have the Frankfurt. This is the what we call the Judas swing. I'll teach you this later. Then we have the London session, the London LAR, the New York session, and then the lead New York. Let me go back here. So we need to know what happens between 1 a.m., 5 a.m. and 9 a.m. New York time. So in your chart now, I think we can now go to the chart. I think we can go to the charts now. So can you see my chart? If you can see my chart, give me a thumbs up. The ones that have missed this class, they have missed the core of what I am going to teach. I'm telling you, this is what we do every day. Every day, this is what we do. So today we will be doing like a back testing. I think we can do the last like 7 days from today and see whether this is working. Okay, see whether this is working. So what is the first thing you are supposed to do? Mark from 2 a.m. this is East African time to 7:50 a.m. So today's Friday. I'll come here and mark 2 a.m. to 7:50. Let me use 5 minutes to do that. 2 a.m. to 7:50. There you go. So what are you marking? You are marking from up to down like that. So I'm sure you are able to see this. TikTok people, I have tried to use landscape in Mekata, so you'll bear with us. So what is this? This is what we call pre-Asian ridge. Pre-Asian ridge or interim. I think this is better. Interim Asian ridge. If you have a biro and a pen, these are good things to write. But you can write the rate up once you follow the meeting. on YouTube. So what happens here is that this is pre-Asian ridge. What will happen is that between 750 and 8, one side of the Asian ridge will be taken out. Between 750 here and 8, you see where 8 is? I think I can draw it with another, this is 8. That is 8. Let me give it another color. We are going to do back testing. You will see like this is actually almost like witchcraft. So between 750 and 8, one side of the interim Asian ridge will be taken out. So you have seen that it has taken out the low. That means the main move for today will be bullish. The main move for today will be bullish. And why do we know that? You can mark from now, you can mark the real Asian ridge is from 2 a.m. to 9. You see where 9 is? Yeah, that is where 9 is. So that is the real Asian ridge. I don't want you to be confused. I don't want you to be confused. So the real Asian ridge is from 2 a.m. This is East Africa time to 9. 2 to 9. Okay, but it has been divided into 3. This is 2 a.m. to 750, 750 to 8, and then 8 to 9. Can you see that? So if you have understood that, let me know. Give me a thumbs up. Good. Don't worry, I want to make sure that this is as easy as possible. So this whole box here, this is what we call the Asian ridge. 2 a.m. to 9 a.m. East African time. 2 a.m. to 9. Okay, let me take that again. Between 2 a.m. and 9 a.m. that is the Asian ridge. So we want to see what happens in the Asian ridge so that we get the bias for the day. And I will leave this for you to go and back test at your own time. So for us to know the bias of the day, we need to mark from 2 a.m. to 7:50 a.m. Okay, 2 a.m. to 7:50 a.m. Then between 7:50 and 8 a.m. one side of the interim Asian ridge will be taken out. One side of the interim Asian ridge will be taken out. If the lows are taken out, we will look for buys. If the highs will be taken out, we will look for sales. I hope we are together up to there. So this move that happened between 7:50 and 8 a.m., this is what we call the one in our 159 strategy, it is 159. Okay, this one is this move. You see this move that happened here, that is the one. Now the whole of Asian ridge, all this, I don't want you to be confused, all this is accumulation. All this is accumulation. All that is what? Accumulation. The Asian ridge, 2 a.m. to 9 a.m. all that move is accumulation. But for us to understand what will happen later, we need to check two things. Number one, you mark the interim Asian ridge, and the interim Asian ridge is from 7:50 to, no, it's from 2 a.m. to 7:50 a.m. That is East African time. Then these 10 minutes, or what we call the laddered open, 7:50 to 8, check which side of the Asian ridge has been taken out. Now this is important. If none has been taken out, wait for the full Asian ridge to finish. Please, hapa ndio watu uchanganikiwa, and I don't want to confuse you. 2 a.m. to 7:50 a.m. it is the interim Asian ridge. Okay, between 7:50 a.m. and 8 a.m. one side of the interim Asian ridge will be taken out. One side. If the highs are taken out, look for shorts or for sales. If the lows are taken out, look for longs or for buys. If none has been taken out between 7:50 and 8 a.m., wait for the whole Asian ridge to finish, which happens in the next 1 hour to 9. I hope we are together. Don't get lost. Are we together? So what happens is that if at 8 a.m. the interim Asian ridge was not taken out, it will be taken out at 9. Okay, at 9, that is the move that will take out one of these. So, but for me, the moment I saw that this was taken out, I looked for buys. If you remember, I posted this buy kwa group. This buy, nilipost hii buy kwa group. Okay, I got that buy in the morning because I knew someone wants to be let in. Perfect. Because I knew the moment the 8 a.m. swept below, I knew that the real move will be bullish or buy. Let me see whether there's someone who has a question here. I got like siku nini mobe. Let me show you, because nilichukulia hapa venye ilirudi, and I targeted this swing high here. So I got 21 pips. Yes, the trade was bullish. The trade was bullish. But what made me know, okay, later kuna vitu mingi tutasoma, because you also need to understand the overall trade of the day and those things. But at least with this information, I'm telling you, this will work like magic. It will work like magic. So the moment the sweep happened below, I knew that I will be looking for for buys. And what gave me that buy, if you look at this, we have an order block here and we have another order block here. You could have used, actually this one is even better, this one, but now because of the pips, this is, you will be risking many pips here if you take with this one. So this one was the best. You wait for the retest and then you use that one. That is why you see that my trades have a very small stop loss. That is a 3 pip stop loss, and then I target that high. Can you see that? Okay, it does work mostly from where I sit. It works with GU, EU, and gold. Those three, those are the ones I have backtested, but you can try other pairs. The goal is go and backtest. Go and backtest, 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 backtest until you get the pair that you like. So that is how I got that move. This is another thing that I want you to go and backtest. At exactly 1 p.m. Kenyan time now, 1 p.m. I hope we are following. At exactly 1 p.m. if the market is buying, look for a short sell. The reason I'm saying short sell is because it moves like around 20 pips and then it continues with the trade. Okay, so that is why I want you to go and backtest. It will sell or buy. It's like a retracement at exactly 1 p.m. Kenyan time or East African time. If the market was buying, look for a short retracement. So you can enter the retracement or wait for the retracement to finish and then you continue with the move. Let me show you. Where is one? Can you look at this? Let me do it for 5 minutes. So we are looking at 1 p.m. 1 p.m. Here we are. So what was happening at 1 p.m.? If you can look at this, the market was buying. The 1 p.m. candle. No, this is the 1 p.m. Can you look at this? The 1 p.m. candle. And then if it's good for you to use the 15 minutes. Use the 15 minutes so that you will not be confused. Look at the 1 p.m. Can you see this? So if you look at the last two candles, the market it's like it was buying. And then what happened exactly at 1:15? This market got or sold like how many pips? 19 pips. And where does the market sell or buy to? It retraces to our order block. Okay, if you look at this, please, I don't want you to be confused. This thing is not difficult. Can you look at this? Where did the market retrace to? It retraced to our last order block. So if you want to refine our order block here, Let's say you want to refine our order block. These are the things I do almost every day. Let's see whether we'll get a better entry. Yeah, that was the best entry. You see what it did? It just tapped and then it continued to buy, and it will buy until okay, before I get to that place, who have understood what I said? I'm telling you this so that you go at back test. You go at back test at exactly 1 p.m. If the market was running up, look for sales, and it is a small sell because this was like a few pips. What I would prefer, this was 19 pips. I told you it is actually it's supposed to be 20 pips according to my back testing. It does 20 pips, but what I would prefer is, instead of catching this move here, you wait for this move. Wait for this move, because this move will give you a higher RR, because you will be targeting this high. How many pips will those be? Those will be 30 pips. That's a 30 pips move. And if you, for example, for me, this is the high I have targeted, that one. I'm actually nimechukua hii retracement somewhere here, so I'm in this trade actually as I'm speaking. I'm in this trade. Okay, another thing, go to exactly, so the 1 p.m. is our 5. Okay, it is 159. The 1 p.m. is our 5. So, and 5 is manipulation. You see this move? This move, or this move is manipulation. It usually starts from 11. Between 11 and 1, or this move. So, this is our 1, this is our 5, this is our 9. This move is our 9. So, this is actually the right move for the day. This is the right move for the day. But I want to show you something else. I want to show you something else. Go to exactly 430. Sometimes it does happen, sometimes it doesn't, depending on the volatility of the market. Go to 430. So, it is exactly at 430 that the main move happens. So, if you did not catch this move here, if you didn't catch this move here, you can wait for it here at 430. Because if you understood that the main move today will be bullish, at 430 we have no business selling. The only business we have is to do what? It is to buy, because the main move was buying. Okay, let me recap this so that you are not confused. I don't want to confuse you. Every day when you wake up, mark the interim Asian range from 2 a.m. East African time to 7:50 a.m. And if you don't see this happening, don't trade that day. I'm telling you the truth, unless you have other strategies, of course, that you trade with. 2 a.m. to 7:50 a.m. mark the interim Asian range. Okay, wait for those 10 minutes between 7:50 a.m. and 9 a.m. If the interim Asian range has been swept downwards, you know that that day you will be looking for buys. If it has been swept upwards, you know that that day you'll be looking for sales. The first thing. The second thing, at exactly between 11 a.m. and 1 p.m., that is the manipulation window. Where the market is going at that time is a manipulation. It wants to trap people. Okay, it wants to trap people, and that is why you will find that between 1 p.m. and 3:30 p.m. actually the main move, or the move, will start from 3:30 p.m. and exactly 4:30 p.m. we continue with the move that started in the morning. So, who wants me to explain further, or do you have any question? Niandikie hapa kwa comment section before we continue. Kwa comment section, if you have a question, if you want clarification about the 159 move, show me in the comment section. So that means Veronica is still lost. Rajab, okay. This is, let's do yesterday's move. This was today's. Let us go to yesterday. So if you have your trading view, you can do this with me. Jana ilikuwa lini? Thursday. So on Thursday we mark 2 a.m. to 7:50. 2 a.m. to 7:50 a.m. There we go. There you go. So this is 2 a.m. to 7:50. So are we together up to there? 2 a.m. to 7:50. Perfect. So in the first 10 minutes we want to see something. If this market will take either the high or the low of the interim Asian range. So we draw from 7:50 to 8. So the market did not take either of the liquidity. Did not take the high, it did not take the low. The second thing we are going to look at is to draw this from 2 to 9, because hiyo ndio Asian rate ya ukweli, 2 to 9. Are we here? 2 to 9. Don't be lost. Naenda pole pole mpaka to understand. So have you seen how I've drawn this? 2 to 7:50, 7:50 to 8, 8 to 9. Have you seen that? So are we together up to that point? Good. We are together up to that point. Now, this is what we call the Asian range, or the accumulation stage. So all these from 2 to 9, this is accumulation. So we are looking at three things. It is called AMD. I hope you still remember this. Accumulation, manipulation, and then what? Distribution. So we have seen, allow me to call all that move the one in our strategy. That is one in our strategy. So that is the accumulation. Second thing, if the market did not take either of the sides at 8, you wait the first side to be taken out after 9 a.m. Okay, actually this is better because I'll show you with this and today's it played out very nice. So you wait the first side that will be taken out. We will look for the opposites of that as our bias for the day. Don't be lost. So let's say we don't know what was happening after here. So this is what we know until now. Okay, we only know that from 2 a.m. to 9 a.m. that is where the market is. By the way, if you don't see these things, don't trade that day unless you are trading another strategy. So if the market takes either of these sides, either the lows or the highs, because all that is here is liquidity, all that is down here is liquidity. And if you remember yesterday's class, I showed you how liquidity looks like. This is express liquidity, this is double top. Can you see this? Who can see that? That is double top, that is liquidity. Okay, this is liquidity. This tip, this swing high here is liquidity, this swing low here is liquidity. So the market every day, sometimes it takes 2 days, must take this liquidity. So if it takes this liquidity, it does not have any reason going up again, unless there is news, of course. It has to come and take this liquidity. If it takes this liquidity, it has no business coming there again. It has to come and take this liquidity. Are we together up to there? Are we here? Tumeelewa hiyo? Perfect. So if it takes the highs, we don't have any business looking for buys that day, because the buyers will be the sales, so that it comes and takes this other liquidity. So let us see what happened. The first that was taken this day, this is yesterday, was what? The highs. So what is our bias for the day? Andika hapa kwa comment section ndio nione tumeelewana. The first to be taken out was the highs. What is our bias for the day? Perfect, sales. So today the main move, we will be looking for shorts or for sales, because this must be taken out. This must be taken out. Let us see what happened. So we will look at what happened at exactly 1 p.m. between 11 and 1 p.m. Can you see? This is 11 and this is 1. So look at this move here. Where is 11? 11 to 1. You see this move? This is what we call manipulation. So this is our manipulation. and this is our 5 now. This thing is as easy as 1, 2, 3. Someone wants to join. Admit. So that is 5, and this is our manipulation. So this move, because this is the move that took out what? This is the move that took out the highs, the liquidity, and then market ikakani kama inarudi. This move is to trap sellers, and then ikakuja this move here. This is what we call manipulation. Okay, if you look at this from here, this is what we call distribution. So from where one is, okay, from where one is, all this move, because remember we were looking for sales. Okay, don't get it twisted, don't be lost. We were looking for sales. So kama ulipata kutoka huko juu, it's good, but if you are not a risk taker like me, you look for what? This move, and where will be, this is 1, Let me show you. We are looking for shorts at 1. Where is our stop loss? The last swing high. You see, that's a 3.5 stop loss. Where is our take profit? Where we have the Asian low. How many pips are those? Those are 25.6 pips. And that day we have our distribution move. So if you understood what was happening down here, okay, let me show you. Because I took this move, someone else took this move, nakubuka jana, and that was my take profit. You see where we have the last swing low. The last swing low, because this is liquidity. Kuna mtu alichukua hii trade jana kama sikosei, ama ilikuwa EU. Someone took this trade exactly the way it is, and I sent you this kwa group yesterday. I sent it kwa group. Yes, okay. At exactly 1 p.m. what you do, don't just enter immediately. You need to look for a retest, if there will be a retest. But mimi ni sniper, mimi ingia ki sniper. Mimi ingia ku sniper, and then I'll show you a very good ziko wapi indicators. A very good indicator inaitwa average true range. You see this indicator here? Can you see it? This indicator. So what you do, ukiingia hapa that 1 p.m. you know that I'm supposed to be looking for sales. Utaangalia ukihova kwa hii, kwa the any candle, ukiangalia hapa side hapa, you see there here, sisi kama mnaona hapa kando hapa, where we have ATR 14 RMA here. If you hover kwa hizi nini, utaona the average pips, hiyo nini inaenda. Unaweza hata huku, you will see the average pips, and for me the average is 7.11. let's say even 8. That means if I put my stop loss at 8 pips, there is no way I'll be taken out if I did my analysis well. Okay, this is the simplest thing you can see on internet, I'm telling you. So ukitumia average true range, ukuje hapa uangalie the previous like 5 candles, angalia zilikuwa zina move how many pips. Okay, ndio uangalie the average. Average is 7.5, 7.6, 7.8. yenye ili move sana, ili move hata tukua tumefika huku juu, sasa ndio tuko saa 7. So the average is, there is none that went past 8 pips. That means if it is exactly 1, and you know that from what we have seen here, the bias is we are looking for shorts, put your stop loss at 8 pips. You will not be taken out unless there is news or the market just, because there are times you can do everything right, but the market just decides to go at the opposite direction. That is why there is no strategy that is 100% profitable. There is none. There is none. So unless the market reverses on you on its own accord, if you used or if you did your analysis well, you will not be taken out. I'm telling you, at exactly 1 p.m. if one of the sides were taken out, look for the opposite direction and you got the move. This is like, if you used that as your stop loss, this is like 10 risk to reward ratio, but me, I used 4. I used 4 stop loss, so I got 20 risk to reward. Indicator inaitwa average true tone, average true range, ATR. This is how it looks like, average true range. Wacha niandike hapa, average true range. Average true range. You can unaweza ipata kwa trading view. Utaipata kwa trading view. Average true range. So I'm telling you, no matter what happens, if you did your analysis well in the morning, you will not be taken out. So this was yesterday, and I got this move, and someone else used another strategy to get the move. It still works. Still works. Okay, so can we now look at today's setup and then we close this thing? We look at today's setup and how everything worked out. Let us look at today's setup, and I'll let you know why I'm actually buying right now. I'm still buying. I'm buying to up to a certain place. Kuna place najua hiyo market itafika leo. So where are we? 2 a.m. By the way, if you come to the market and don't see this, my advice is, unless you have another strategy, don't trade this strategy if you don't see these things working out, because there are sometimes they don't work out. It's not every day that it will work out. So you go at back test. Go at back test. Go at back test. At least to corner trading view, you can back test up to how many months? This is a lot of months. Inakupeleka hadi April. So you have a lot to back test with. Back test and see if it works for you. So let us look at what was happening today. Let us look at what was happening today. Just a minute. Just a second. I see whether, oh good. We are good. So look at this. 2 a.m. to 7:50. 7:50, and then make sure you have captured the swing low and the swing high. Follow me. This is the last example, and then we'll be done for the day. So can you see that the next thing is 7:50 to 8 a.m. So let me give this one another color like that one. The last one is the main Asian range to 9. And then thumbs up if you can see this. Thumbs up if you can see this. I don't think this is difficult to see. Perfect. No, you don't have to use 5 minutes. I'm just using 5 minutes so that I can get the easy for like for 7:50 you have to use maybe 5 minutes. You get 7:50. Yeah, the goal is to make sure that you've drawn the right thing. Okay, now look at this. Look at this. This works like magic. This is the interim Asian range. At 8 London open, which side did it take out? The low. Can you see that? So once you see this in the morning at 8, you don't have to think about it. You should know that today, what are we doing? We are going long. We are going long. Because the market venye tu iliingia, the first thing ilifanya ni ku take out the liquidity, ya sell side liquidity. This is what we call SSA, sell side liquidity. You see, it took out that liquidity here. Can you see that? Now, wait, don't enter the trade here. If you enter here, it will ramba you. Don't enter the trade here. Wait until 9 a.m. Okay? Wait until 9 a.m. Because nataka tuingilie hii trade hapa. You see this retest? And I need you to know how you will wait for this retest. So, the market has already told us from our 8 a.m. that today, what are we looking for? We are looking for buys. Today we are looking for buys. So what do you wait for? You will wait because sometimes the market can come and take out this liquidity and then buy, and then it will come back. Okay? But we want to get the main move for today. The main move is the buys. Okay? So what do? Wait for this. Kuna watu crazy kama mimi, I usually get this move. You see this one? That is like 11 pips. But don't do that. Don't do that. You will blow your account. You will blow your account. So, usiingilia hapa. Wait for the market to go, and then it will come back to an order block. Which order block? At least by now tunajua what order blocks are. We looked at these things yesterday. If you look at this is FVG. Okay. Can you see that? If you remember my advice yesterday, nilisema don't trade FVG. I knew what I was saying. But maybe unaweza trade FVG a higher time frame. It can work for you. The goal is to make money. Can you see that FVG? Now, if you followed my yesterday's class, nataka nione kama tulishika. An order block must answer 3 questions. Number 1, type hapo nione kama tulishika kitu. Isikuwe kazi yangu hapa ni kukosa usingizi na mshikilie. Yes, break of market structure. Perfect. Did it sweep liquidity? Perfect. What is the other thing? There is one more thing. Does it have FVG? Good. So, nataka, I want us to vet, allow me nitoe, allow me now, we vet our order block here, which I have drawn. Allow me to vet hii order block yetu hapa. Number 1, first things first. Did it sweep liquidity? What is this? Can you see that? That is liquidity swept. Does it have FVG? All this move is FVG. Can you see this? Hii yenye nimechora hapa hii. This is FVG. FVG. Can you see that? Number 3, did it break structure? What is this? My friend, these things are not hard. So is this a valid order block? From where I sit, this is a valid order block. It swept liquidity, it broke structure, and it has FVG. So that means we wait for this market. Na hii kitu kuwa crazy. Because market makers don't want you to make money. They don't want you to make a bob. A bob. Can you see this? This is crazy. 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 Hapa ndio watu wachwa na nini na pesa. Can you see what happened here? Immediately the market tapped. It had no business staying there because hawataki upate this whole move. They don't want you to do that. So immediately the market tapped there. It bought like no one's business. It bought like no one's business. This was 34 pips immediately. And this happened within 1 hour. Within an hour. That means, ukiingia hii market na standard lot, ungekuwa na pesa ngapi? Within 1 hour. $340. $340. Hebu niambie nani anatengeneza hii pesa within an hour? How much is that? $340 times 130. That is 44,000. Hiyo ni mshahara ya manager wa Equity. 40,000. Manager wa Equity mwezi mzima wewe umeuma na wana. This is why SMC is the way to go. I'm telling you. It will give you money within a very short time. Money within a very, very short time. This works, Millicent, nimesema ina work sana sana GU, EU na gold. But nowadays I trade gold, imenionyesha kivumbi. I don't trade gold nowadays. I trade GU and EU. GU and EU. Bora ni pesa. Something else. If you remember, we said something. Okay? There is something we said here yesterday. Tulisema the market will induce people so that people think, because if you look at this broke structure here, it had FVG and it took out this liquidity. So most people will think, ama watu wengi, they will come and wait for the market to retrace to this position, and then what do? They will take a buy position. What will be their target? That one, and then stop loss below this. But what will the market do? Itakuja, it will take out this liquidity and come to our new order block. Okay. If you look at this, there is an FBG there. Can you see that? There is an FBG there. But most importantly, there is a breaker block here. Do you remember yesterday we learned about breaker blocks? Breaker blocks. This is a breaker block here. So this market came, tapped into the breaker block plus the FVG. What did it do? It is now buying like no one's business. It is buying, nothing else. It is just buying. So our thing worked here. It worked today. It worked yesterday. And most of the cases, especially with GU, once the market leaves this place, it is never coming back. You see, once the market left this manipulation window, never coming back. We sell, and then we repeat. It is sell, we repeat. We buy, so on Monday we repeat. We'll have something like this, like a raging market. And that is as easy as 1, 2, 3. As easy as 1, 2, 3. So back to our thing here, so that I just wanted you to understand this. You see, from 2 to 7:50, 8 a.m. there is a sweep. 12 between 11 and 1 there is a manipulation. 4:30 New York open, there is the main move. That is what is happening here. Can you look at this? 2 a.m. to 9 a.m. we have the Asian ridge. Okay, the Asian ridge. Then what happens? This move happens. So one side of the Asian ridge has been taken out. So what is our real move? It is a sell. And this happens almost every day. Now you use the ATR. Let me go back to trading view. You use the ATR to do this. For example, let's say I have seen another block here. Let's assume this is another block. And I want, when the market comes here, for example, maybe I don't have the time to wait for the market to come here. I want to do another limit here. So I want to do this. I want to put my stop loss in a place where I'll not be taken out. So you use the ATR to check the last like 10 candles. What is the average pips each candle inaenda? What is the average pip? Oi, kuna mtu anaingia saa hii tukitoka. What is the average pips each candle is moving? If you come, can you see what is on the left here? Can you see this? This here, where my cursor is. If you can see it, just, oh, perfect. So you want to check how many pips each candle is going in an average. It usually measures 14 last candles. So if you look at that, it moved 4 pips. If you look at that, 4.1. If you look at that, 4.1, 4.2, 4.4, 4.5. Ukikuja hadi huku 5.8, 5.8, 5.6, 5.5. That means for the last few minutes, there is no candle that has gone past 6 pips. Okay, so if you have done your analysis well, and maybe this is the order block you will use, let us use this one, that one, and you want to put your stop loss where you will not be stopped, you come and do 6 pips there. So when you do that, you are sure that there is no candle that is moving past 6 pips. So that is how you use the ATR. It is very good, especially ukiweka zinaitwaje stop loss. It is very good. It works magic. It works magic. It works magic. And then it will help you. Usikuje kuweka stop loss ya 20 pips. That is not trading. That is nonsense. 20 pips stop loss. 20 pips is my take profit. Yeah, 20 pips is my take profit. So you need to understand the market such that once you maybe identify another block or a breaker block or FVG, unaweka stop loss yenye even if you are stopped out, you are not going home. You are not going home. And then it helps you with your what is this? Risk to reward. I usually advise don't take a trade with less than 5 RR. Don't take that. That is my own thinking. If it is less than 5 RR, leave it. Leave it. So ATR will help you to put your stop losses. To put your stop losses so that you will not be stopped out. So that you will not be stopped out. Yes, Carol. Carol has raised her hand. Nikiwa na strategy siwezi lala jana. Uwezi lala jana kwambia. Even if you will be looking at 20 pips every day and trade with maybe 0.1, you still have money. You still have some good money. You still have some good money. So I wanted to, before we go, I show you this last thing and then we move. So, but I'm going to send you this on kwa ile folder yetu ile. I'll put this PDF so that you can go through it again. So this explains exactly what I have taught you. Asian range manipulation distribution. Asian range manipulation distribution. So I have explained all those things here. This everything I've explained it here, so you will not be lost. And that is what we call AMD or the 159 rule. So do you have a question? If we have a question, I answer. If not, we call it a day. If no question, we call it a day. Watu wa TikTok hawana maswali. I hope mumepata kitu. If you have gotten something, let me know. There's a folder I sent kwa group. There's a link I sent you. I sent you a link. You'll be able to see this PDF kwa hiyo link. Kwa hiyo link tu nilituma kwa email. You just click it and then you will see this one. Isa, do you have a question? Yes. Uh-huh. 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 Yes. So what I usually do, natumia ATR kujua kwenye nitaweka my stop loss. Most of the times the market makers don't want you to make money. So immediately at 1, are you following? Oh, yesterday's. Here we are. So I'm saying the market makers don't want you to make money. So they might not come back to this order block. So if you enter the market with a retest, there are some trades yenye uta lose. But me, what I usually do, nikiangalia hapa nione ni saa 7, I don't have anything else to think about. If the swipe was short, I will look for a buy. If the swipe was buy, I look for a sell. And then I use the ATR to put my stop loss. Close to 70% of the time it will work. Sometimes you will be stopped out and then it continues with the move. But a strategy that gives you 70% win rate is crazy. So that's what I do, Isa. Welcome. Do you have another question? Okay, looks like we are good. So someone is asking for TikTok, help me understand market structure. For you to understand market structure, it is very easy. When you go to your chart, for example, if you look at this, let's do 4 hour. Now the market is doing 3 things every day. It is either accumulating, manipulating, distributing. Or the market is in an uptrend, a downtrend, or a lull, ama sideways. So this is the market structure. When you look at this is a sideways move. Okay, so the market is moving sideways from here to here. So if the market takes either of this side, you look for the opposite direction bias. So this is what we call accumulation. This is what we call manipulation. This is what we call distribution. It is the same thing we've learned, but now this is looking at it now in a different way. These things work like crazy, and it will happen every single day. Every single day. So this is accumulation or sideways market, and then this is an uptrend. The market is doing a series of higher highs, higher lows, 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 higher highs. Are you following? After this higher high, the market never did another higher high. It did a lower low, lower high, lower low, lower high, lower low, lower high, and the market is just selling. So this is the market structure. That is an up trade. This is a down trade. And this is a raging market. It is as simple as that, Sly. Very simple. Either the market is raging, it is in an up trade or a down trade. Let me release my class next week to some CRT. That is okay. So see you probably next week on Tuesday.